Hello, everyone, and today we're going to talk about VA financing, why it is so awesome, it is a great product, and how you can use it. Here we go. So, VA financing comes from the Department of Veterans Affairs. It is available to anybody who has served time in the military, typically, depending on what kind of service that you did. It's usually 3 to 4 years for regular service, and then it's 6 years or more for if you're a reservist. But sometimes you can still get a certificate of eligibility and still be able to use your VA financing under different circumstances. A lot of that is going to be based on your DD-214. As you know, that's your kind of your discharge that sums up everything about your military service, what your rank was, what branch of the military it was, if you were honorably discharged or separated from service. All of those things are detailed on your DD-214. And that usually can be submitted for a certificate of eligibility, which comes from the VA itself, which will usually say, yes, this person can use VA financing. They have all of their entitlement. It's good to go. So why is VA so awesome? Well, VA, you can buy a house with a VA loan using 0% down. Okay, that's not zero out of pocket, but it's as close as you can really get to it on pretty much any normal purchase. It's 0% down. It doesn't have any mortgage insurance on it. So even with 0% down, no mortgage insurance. And it's just a great product in that way because your monthly outgo is going to be lower. Now, the drawback, it's not really a drawback. I would say one of the conditions of VA is that there's a funding fee. All right, it's usually, I think it's 2.15% of your purchase price is going to be an amount that's added to your loan. So you don't come out of pocket with it, but you do have to, it does make your loan amount higher. Now, if you have any percentage of service-related disability through the VA, any percentage, you can usually be exempt from paying that funding fee. So that's a bonus. And I would say out of most of the VA loans that I've done, a lot of them have had at least some level of disability through the VA where they didn't have to pay that. With VA, every time you use it, you have to pay more and more of that funding fee if you're not exempt. So that's just something to be mindful of with VA financing. But that's kind of how it works. So to be eligible for it, you need a veteran, you need to have served in the military, you need to be able to get a certificate of eligibility. We use your DD-214 to do that. Loan product itself is awesome. You can typically get in with not as much out of pocket as other loans because there are certain fees that the VA has basically said, if you're a veteran, you can't pay these fees. They're called VA non-allowable fees. Usually you want to get some kind of seller credit to cover those fees, especially if the loan amount is going to be lower, like $200,000, $250,000 or lower. If you're about $300,000 or more, the lender can usually pay or will charge an origination fee, but usually that fee is going to cover certain charges that can't be billed to you directly. It really just depends on your loan amount and how much you're buying. But VA is a great product. I highly recommend it if you have access to it, to use it. The only major drawback to it that I have seen when we have a very strong seller's market, so when we have not very many houses for sale, lots of buyers, VA offers seem to kind of get shoved to the back of the pile, the bottom of the pile. The reasoning for that is because of those non-allowable fees and usually needing to get some seller credit to cover those. So the seller has to kick in some money to cover some of those fees. Sometimes they'll push that offer to the side because they're looking for offers that typically don't require any money from them. And if there's a lot of buyers and there's a lot of competition, it can be kind of tough. That's kind of the drawback I have seen with VA buyers is they run into that sometimes. And it kind of depends on where you live. I live in a military town. There's tons of military people here. VA financing is probably not a majority, but it's probably a higher percentage of the loans that are being done here. And you have a lot of veterans who live here. So I imagine if they're selling a home and they have other VA offers, other veterans that are looking to buy, I'm sure that there's probably more priority would be given to those buyers. That's what I would assume. I'm not a veteran. I can't speak to that. But that's what I would assume for that. So those are kind of the nuts and bolts of VA. The interest rates are very similar to FHA since it's both another government-backed type loan. The credit can be scrutinized a little harsher for VA, but you can also get away with higher debt-to-income ratios than FHA sometimes, depending on how your credit profile looks. So it's got some interesting quirks, but it's a great product. Yeah, so if you have any questions about that or any other loan programs or just terms that you've seen you don't understand, leave a comment below. If you found this information useful or found any value in it, go ahead and give me a like on that. And if you haven't already, subscribe to the channel. Just trying to get more of this information out there. I'm not selling anything. I'm just sharing my expertise from being in the mortgage industry as long as I have, and having conversations with so many different buyers trying to buy a home and kind of work through and muddle through everything that's involved in that. So that's everything. I'll talk to you guys another time. Peace.